Goldman Sachs reduced its oil price forecast following decisions by the OPEC Plus to accelerate oil output increases. The bank now expects Brent crude to average to $60 per barrel for the rest of the 2025 and $56 per barrel in 2026, down by $2 from its previous estimate. It has also cut its forecast for West Texas Intermediate crude by $3 per barrel, now projecting it to the average of $56 per barrel for the remainder of 2025 and $52 per barrel in 2026. Goldman Sachs views the OPEC Plus decision as a long-term equilibrium strategy aimed at maintaining internal cohesion and strategically regulating the U.S. shale supply amid relatively low inventories. And moreover, Goldman Sachs has expected gold to outperform silver, citing strong central bank demand for the bullion as a factor that has structurally elevated the gold-silver price ratio. And as a result, the bank does not expect silver to catch up with the ongoing gold rally. The gold-silver ratio, which measures the number of silver ounces needed to buy an ounce of gold, currently stands at around 102 versus about 84.7 a year ago. The bank highlighted that with the Chinese solar production now slowing amid oversupply, high recession risk, and central bank gold buying remaining strong in 2025. And oil prices fell more than 1% on Monday after OPEC Plus decided over the weekend to further speed up oil output hikes, spurring concerns about more supply coming into a market clouded by an uncertain demand outlook. Brent crude futures dropped by a 1.47% to $60.39 a barrel, while the U.S. West Texas Intermediate crude was down 1.68% at a $57.31 a barrel. And gold prices gained over 2% on Monday, driven by a weaker dollar and a safe haven demand, while the market awaits a policy decision from the U.S. Federal Reserve later in the week. Spot gold was up 2.3% to $3,315.62 an ounce. U.S. gold futures were up to 2.5% to $3,324.50, and the dollar index fell 0.5%, making bullion less expensive to other currency holders. And in markets, futures for the Dow Jones Industrial Average and other major stock indexes dropped Monday as Wall Street reacted to President Donald Trump's latest tariff news. And in the U.S., the Dow Jones Industrial Average inched down 0.01%, the S&P 500 declined 0.43%, and the Nasdaq Composite dipped 0.59%. In Europe, UK's FTSE 100 climbed 1.17%, Germany's DAX increased 1.12%, while France's CAC 40 dropped 0.44%. In Asia, markets in Japan, Hong Kong, mainland China, and South Korea were closed for public holidays.